Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from GoGold Resources, Inc. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Brad Langell, President and CEO and Director of GoGold Resources, Inc., which trades on the OTCQX Best Market under the symbol GLGDF and on the TSX under the symbol GGD. Welcome, Brad.
Oh, good morning, Matt, and thank you for having me. It's a pleasure to be presenting today to your audience. And I have a presentation here that I'd like to share with the audience. I'll go through a few things about GoGold Resources and what we're doing here in Mexico and what we've been doing here for the last 27 years. So on that note, I'll just start with the presentation. So just a few forward-looking statements. We'll make some forward-looking statements here about what we think may happen in the future with our projects. We're subject to the normal risks of mining projects, which are, of course, resource risks, metallurgical risks. But how we mitigate risks are that we have a very experienced technical team, and we've been doing this for a long time. Talking a little bit about the management of the company, myself, these are the four companies that I've led in the capital markets, all in Mexico, where over the last, we're in our 28th year in Mexico here. We've built 4 mines, and we're getting ready to build our 5th. And these have been built over these 4 companies. We've typically had a model in Mexico where we deal with a lot of the, I'd say, off the radar assets that we get kind of first look at. That we do that by dealing with a lot of the private families who have had assets, and we do these deals. For example, in Gammon Gold, our very first one down here over 20 years ago, we bought the asset for $15 million. And with a large investment into the asset over about a 7-year period of about $250 million, we developed 2 mines there, producing over 250,000 ounces a year. And the company reached a market cap of over $2 billion. Mex Gold, another one, and typical in our model, we found an asset that was in a private family for about 60 years. We acquired that. We spent $45 million on doubling the production, and that asset was sold 3 years later for $375 million. Nayarit Gold was one of the smaller ones where we had a discovery, and in 2010 it was sold to a company out of New York, Capital Gold, for $80 million. But for the last dozen years, it's been GoGold Resources, and solely GoGold Resources, which I've led for the last 6 years as CEO, but I was a founding member of the company. And in GoGold, we have one producing asset that's been producing for 10 years, and we're on the verge of building our next mine, which we hope we'll have permitted. We're hoping for the end of the year and get underway with the construction on the ground in the first quarter of 2025. So just to talk a little bit about our capital structure. Of course, all of this takes a lot of money, and a lot of capital are deployed in these projects. And we're very good at doing this as well in the capital markets. Over the last 20 years, the companies I've led, we've raised over $1.5 billion of equity, and we've done hundreds of millions of debt deals to build these mines. And being able to do that and deal with retail investors and the institutional investors and get that kind of funding is key in success of these companies as well. But in GoGold, we have about 329 million shares, and we have cash, a little less than that now, about 77 million US cash in the bank, plus a large receivable from the Mexican government. And that's for value-added tax, which we do recover all of that. It takes a little bit of time, and they do pay interest on the outstanding balances. But we've been recovering that every year, getting back our value-added tax. So with all that, we would have funds of around 100 million US available capital, no debt, and we have a large institutional following, as you all know, many of those names on the right there, and a very large retail following as well. We're about 50% institutional. As far as the management of the company, we do have a lot of skin in the game. I would be the third largest reporting shareholder in the company, and at around 6% of the company. So what have we been doing over the last 12 years in Mexico? We're doing what we typically do in these companies. We had our Parral project, which is our operating project. And just to note, we also did have the Santa Gratuitas project, which was a project that we acquired for $9 million in 2014. We spent $11 million on that project. We developed it to a pre-feasibility level. And then we were fortunate to sell to one of the premier mining companies, large mining companies in the sector, Agnico Eagle, for about $85 million US. So a good return on investment for that project. And our real flagship project, the driver of the company, is Los Ricos. And Los Ricos is a project that we've been developing since 2019 March, where we went in and we acquired that from private owners for $7.5 million. Since then, we've completed about 250,000 meters of drilling and economic studies, and we moved that project forward, where we were at the point a little over a year ago where we could apply for a permit, and we're now just waiting for that permit, going through the process. We're at the end stages of that process, and we hope to have that permit by the end of this year and be able to be building that mine by the first quarter of next year. In fact, while we're waiting for that permit, we're completing engineering. We're completing a definitive feasibility study. That's the highest level of feasibility study. In the last calendar quarter of this year, we'll be completing detailed engineering. And we are currently, we have agreements to acquire all the energy, all the electrical power for the project, which will be about 14 megawatts. And that will come from a hydro dam that's 36 kilometers away from the project. So some good green energy for the project. We'll put our down payment on that project to get the power lines in, and we plan to do that in the very near future. We are very, very confident about getting the permit, so we're confident enough we'll start making some expenditures. We have agreements on water. These, of course, are two of the big parts of any mining project, that you have secured water and you've secured power for the project. And we are doing that right now because we're so confident that we'll be moving ahead and building the project with the permit in hand. Talk a little bit more about Los Ricos and where it's located. Very well located with great infrastructure. It's only about an hour and 45-minute drive from a city of over 6 million population, Guadalajara. It's in the state of Jalisco in Mexico. And the project is a drive-in, drive-out, easily accessible. From a town of about 6,000 people, it'll only be about a 45-minute drive. So this project should be a project with not requiring a camp, that it would be the employees of the project would be bussed into the project every day, do their shift, and then bust out of the project. So Los Ricos, it's the claims are on the screen in front of you. For scale, that would be about 25 miles. And we have two sets of claims, Los Ricos South and Los Ricos North. The project, again, I mentioned that we acquired it in March of 2019. And when we did that, we had 26 concessions. And since then, it's been both technical work, drilling, economic studies, but also it's been continued consolidation of claims. We're now at about 45 concessions, and we have the land package that we need. to have a district size project and a project that will grow and be our pipeline for the next 5 to 10 years in the future of growth in this project as we develop mines in Los Ricos South and Los Ricos North. The project has about 280 million ounces of silver equivalent in all categories. I did mention that we do have not just resource studies and all those ounces in Los Ricos North and Los Ricos South, but we also have economic studies. We have completed last fall the second or an updated preliminary economic assessment. And I'll just mention that preliminary economic assessment, which would be an early stage, typically an early stage study, and we did do an early stage study there a couple years ago. We updated that. And that study would be what I describe as almost at pre-feasibility level. The part that was missing was the geotechnical drilling with Golder Engineering. And in fact, since we published that preliminary economic assessment, we have completed all that engineering or geotechnical engineering, in fact, to a feasibility level. So that was the only thing that really separated that project from being called a pre-feasibility project or study. Now, currently in Los Ricos South, we're completing what's called a definitive feasibility study. And that study we plan to publish in the first week of September. And then we launch right into our very final engineering work, design work, basically the blueprints to build it, which we should have completed by the end of the year with permit in hand. We'll be breaking ground in the first quarter and getting the project built. That project is an 18-month build. I'll go a little bit more into that in a moment. Also in Los Ricos North, we have also a preliminary economic assessment financial look at the project, and that was completed in last spring. So if you look at the two studies in Los Ricos South, we have a project that has a net present value of 458 million as defined in that preliminary economic assessment, and a good internal rate of return of 37%, 11-year mine life. It's going to recover about 8 million ounces of silver equivalent a year at really good costs, at costs that we anticipate to be around $9 all-in sustaining cost per silver equivalent ounce. So some of the lower costs per silver equivalent ounces in our business. Now that project initially has been planned at a 148 million initial capex, and then and that was planned at a mill that was 1,750 tons a day, starting as an underground mine, and then expanding in year 3 to have an open pit as well, and expanding the mill to 4,000 tons a day, and that was another $69 million of capital. So we are working on the definitive study right now, and really I'll talk a little bit about how things have changed as we progress with the project from the preliminary economic assessment. The project originally was an underground project. This would still be the same kind of pre-production and first year development as we set up the mine to produce as a bulk underground mine. And what I mean by bulk underground, we use a method that's called longitudinal mining. Our mining widths that we'll be mining underground are quite wide at over 11 meters, or that's approaching about 36 or 37 feet wide. So true bulk mining. And as you see there in the gray-green, these are the mining stopes or mining areas that we'll be mining year by year as we progress. And in the preliminary economic assessment, we're always going to start as an underground mine, and then we were going to mine towards the bottom of an open pit, which would have started in year 3. Now, the change that we've made here in our planning is that we've looked at it, we've done trade-off studies, and we realized that really this makes a very good underground bulk mine and the economics are such that we could mine that whole deposit right to surface with an underground mine. And the advantages of doing that are less of a disturbance on surface, less of an environmental footprint, and quite honestly, a mine that becomes easier to permit on a social level, an environmental level, and that's the route that we've chosen. There's been a bit of noise in Mexico over the last year about open pit permits. The last president was against open pits. His term ends on October 1st. He's on his way out. We see that the new president coming in, Claudia Sheinbaum, we believe, we'll have to see, but that she is going to is more open to mining. They're more they understand that the mining industry is a significant part of the Mexican economy, and everything we've seen as she's formed her cabinet and the people who are going to be on their team, they'll have a very good social approach to the mining industry, which we ourselves share. They'll have a strong environmental approach, and a very, very strong approach around water usage, which these are all things that we share and we've been doing for a long time as far as building these mines. And but we do see that they're displaying to us that they're going to also understand the economic benefit. The new president of Mexico, we understand her to be uh, an environmentalist, which is fine with us. We are as well. As a miner, we're very conscious of the environment and our communities that we work in, and the benefits to the communities that we work in, and that everybody has to win in this, all the stakeholders. So I do believe we're very aligned with um, the policies that are in Mexico, and that we will be in a good position to get that permit, we hope, by the end of the year. But again, an underground mine with a lower environmental footprint really helps to expedite the route to getting the permit. And we operate everything at the best practices. And what we mean by that are tailings. Tailings have been, a big issue for mining. How you deal with them. We do best practices, which are called dry stack tails, where they're, and then we take these tailings, and you see these mining areas underground. Well, we actually take those tailings, and tailings are mine waste after it's gone through our mill, and we mix them with some cement. We detoxify them first. We take out any chemicals that are there, make them neutral, inert. Then we mix them with cement, and we pump them back into the ground. And essentially, we're putting cement back in where we took the rock out, and we're stabilizing the mine for safety. And we get those mine waste, those tailings, back into as rock or cement underground as they originally were. So anyway, our plan now is to mine right to surface, and at the very end of the mine, we would have a small open pit which would extract just some of the low-grade halo around the top of the deposit. So again, this is Los Ricos South, and anticipated in the study to be over 400 million US net present value, generates a very strong NPV, 8 million ounces silver equivalent per year of production at an all-in cost of around $9. Also, there's tremendous exploration potential, brownfields around this mine that we're building. We know from historical records that historically this was a very high-grade portion of a mine that was operated there by American interests from 1908 to 1929. A very successful mine for those 22 years. Now, we'll do some mining around what they left behind, but understanding data that we are able to acquire on their old mine from old archives in Missoula, Montana, of all places, we were able to acquire all that old data. We were able to use those to discover another deposit over here called the Eagle. And that deposit's all intact and is very, very high grade. So also from that old data, we were able to understand that in 1927 they found another strong ore body down deeper in their mine, down about 850 meters, down about 2,700 feet below surface, and some of the highest grades in the mine. Now, they found those in 1927. In 1929, there was a revolution, political change in Mexico, and they left. But we know this is there. We haven't drilled it yet, but we do have 1,000 historical samples down there. And that's real brownfields exploration, near mine exploration, that we will be focusing on over the next year. Even as we're building this, we're planning to do some work as we get underground to drill that and show that there's a whole, we hope, a whole other horizon down here, which could substantially impact what's already tremendous economics. So that's what we're doing in Los Ricos South. Let's talk for a moment about Los Ricos North, where we have about 160 million silver equivalent ounces. We did complete last year a preliminary economic assessment, an early stage first look at what could be the economics of this. And again, it's beautiful ore bodies at and we did the work on this at a 5% discount after tax. That also would have over 400 million net present value with a strong return on capital of 29% IRR. In that study, it demonstrated a mine life of 13 years and produced a silver equivalent of 8.8 million ounces a year at all-in costs under $10 an ounce. Again, very low costs for our industry projected per ounce of silver equivalent recovered. So this project, again, I mentioned that it's earlier stage. The project in Los Ricos South is now in definitive feasibility and the final stages of permitting, and we're getting ready to build. This is an earlier stage look at the economics in Los Ricos North. But with this look at these economics and the production profile, we see a real opportunity to grow out the district in Los Ricos, a real opportunity to build this mine first that we will be breaking ground on. In fact, we'll be doing this year the final blueprints, the final engineering, working on the power, building the water supply this year, and launching into the rest of the construction in first part of 2025. But following that, here's Los Ricos North. What our plan is, while we're building this, to be continuing with the infill drilling, the engineering in Los Ricos North, and getting it ready and getting it permitted and getting it to definitive feasibility study, so that when Los Ricos South is finished and we're producing that 8 million ounces of silver equivalent a year, then we're looking to build Los Ricos North to add on the production up there. Because our belief, as we look forward into the future, is that Los Ricos South and Los Ricos North together, both into production, could be a district-wide mining operation that could produce 15 to 17 million silver equivalent ounces a year at all-in sustaining costs of under $10 an ounce. Of course, there's lots of work to do to get there, but it's very good for GoGold that we have a clear path to development of the district between Los Ricos South and Los Ricos North. We have our own internal pipeline to grow the company from where it is right now as a single asset producer in our Parral project, where we produce approximately 1.8 million silver equivalent ounces a year and some copper and zinc, and take it from there to a company that would be 15 to 17 million ounces of production a year and have mine lives of more than 10 years. And also, beyond that, growing the district of Los Ricos to its full potential. I will mention that we had a very, very large exploration program over the last 5 years. And we, by no means did we stop doing exploration because we were not finding. We were hitting some of our best holes, our best drill holes. But it was 5 years down the road with the project. The market saw that we had large resources that looked to be economic, and that it was time to show and engineer our path to production and cash flow, where we can be enjoying the commodity prices that we see today and building that next premium silver producer in the industry. And I will mention that all these economics were done at $1,850 gold and $23.75 silver. And of course, the metal price has moved up substantially since then, which should make everything just that much better. So with that, I'd like to open up to the audience for any questions that you may have about GoGold.
One question here. Are you providing production estimates for 2024?
So for 2024, we only have a small producer right now, and we do give some guidance that the company will produce in a range of about 1.6 to 2 million ounces a year, and that's based on the historical heap leach there, what we've done in the past. As far as I would describe it as, we give some guidance. We haven't been too focused on very detailed guidance. As it's a small operation, and in fact, in some ways, it's as much an environmental cleanup as it is a producer. Though it has made us money, and it has been very beneficial to the community that it's in, a community of 135,000 people. But of course, as we become a much larger miner with Los Ricos South and Los Ricos North, we would do the more typical guidance.
Last question. What are your milestones for the next 12 months?
Yes, the milestones for the next 12 months are very clear. The next milestone for us is a definitive feasibility study, which will be issued in the first week of September. We hope to we'll have that in our hand for the Beaver Creek Mining Show and the Denver Mining Show in September. They're two very important mining shows in our institution. They're mostly institutional, some retail in our industry, and we want to have that milestone there. The next milestone beyond that is we hope to have a permit by the end of this year. We're so confident that we are actually building the power infrastructure and the water infrastructure for that right now. And of course, the biggest milestone will be the start of construction by first quarter next year.
That concludes the questions.
Well, great. Thank you, and thank you to the exchange and to our audience today. And any more information on GoGold, please reach out to us on our website, where you can contact